You are looking live at a daily chart of the Nasdaq, which is not trading today. It's a Saturday. So I just wanted to take a look back and see, since our rally began in last October, had a follow-through day in November 1, and it's been rallying ever since. We've had these, slight little pullbacks along the way. I think the greatest one was like less than 4%. But anyway, I want to take a look at the recent action because people are really concerned with the candle on Friday. And it made a new high at 16,449 and then pulled back to its 10 EMA. Everything went down, it just seemed like machine selling, makes a new high and the algos just take profits, right? So, but in actuality, what did it really do? And have we seen this candle before? So last week, this Friday, on Friday, March 1st, it made a new high of 16,302. Monday, we came in and it sold off right away. And then Tuesday had a, real bad day, down 268 points, 1.65%. But really, all it did was come down to its 21. And then the next couple of sessions just blasted higher, 242 points on Thursday, and then made a new high on Friday and pulled back. A lot of people were thinking like, oh, we're off to the races. So, like Lee Corso says, not so fast, my friend. Where have we seen a candle like this before where, makes a new high and then pulls back and closes at the low of the session? We saw it recently here on February 16th. This was the Friday options expiration where, SMCI had that reversal. It made a new high, 15,917 above the prior session, closed at the low of the session and just pulled back to its 10 EMA. Again, here on the 12th, made a new high of 16,080, pulled back, closed at the low of the session, then followed through to the downside. So my expectation with a candle like this is to, probably have some follow through to the downside. And if it comes back to the 21 or even the 50, it's only 3.8%, above its 50. So, that would still be normal action, in my humble opinion, or maybe not so humble opinion. Anyway, there's another bar like this we saw December 20th where it made a high and then pulled back. Then we got into the last 2 weeks of December, first 2 weeks of January, which our friend Mike Webster always says is a little wonky. So I'm going to kind of disregard these little candles in here. But since we've had this rally recently, we have seen, bars like this before. And we're just looking for support at either the pink or magenta line, the 21, or the green, the 10. And right now it's just at the 10. So I wouldn't get too alarmed about that candle. Yeah, it made a new high and pulled back, but I mean, still, it closed at 16,085, and keep it in perspective. This is still, early in the power trend. I would say we've had much longer power trends, and one day does not change a trend. Anyway, if you look back, this is a weekly review. So thank you for watching my weekly review. You can see the nasty market, a bear market, Fed-induced bear market with higher interest rates. Now the multiples expand. We have good earnings. Here's your 3 legs down last summer, and then the ensuing rally, which we're in right now. So I don't think one day changes a trend. That's I'm going to stick with that. March, we're down, 6 points. Okay. So we're early in March, but anyway, that's it for the Nasdaq. I'm going to get to the stocks. I like trading stocks. I like owning stocks, and you could see this bar. People are really concerned about NVIDIA. The market's probably, or the Nasdaq's probably not going to go higher without NVIDIA. Yeah, it made a new high, then pulled back. A lot of people were saying, oh, 1,000's a cinch, and it probably is. It's just, it needs to pull back. Gosh, I know a lot of people are saying that's the top. Maybe it is. I don't know. I mean, I'm just going to take things one day at a time. But NVIDIA did have a new high on Friday. I mean, this is a weekly review, so I got to look at the weekly bars. This is up still 6.3% last week. I think we'll all take a 6% gain each week. I know a lot of people hold this thing. The RS line, all the trend lines are pointing due north here. So yeah, I won't read too much into the I know everybody's selling and when 100% cash, but this thing could gap up Monday morning. You're gonna pay it a lot more for it. Sure, it could gap down, it could come to its 10, it could come down to its 21, it could come down to its 50, and that would still be normal action. It's got a little gap here, 688. So we'll just take it one day at a time. Don't get too excited. This has been a big winner. Obviously, it broke out from that 500 area and has run up to, what did I say, 974. That's a heck of a move. So, if you bought it properly, like, we teach at MC Stock Charts, then then you can sit out, you can ride out some of this volatility. And you have to expect volatility when the market's gone up so much. And even if these stocks do pull back and the Nasdaq pulls back, it's going to provide some setups because a lot of these stocks are just way extended. All the leaders are out. There's all the strong stocks are way extended, so it's hard to buy them. I'm going to get into that with a couple stocks that I'm looking at. But anyway, SMCI is another one. I mentioned that one earlier. You have to have some guardrails when you own stocks like this. And what I just used the 21 to, for me, as long as SMCI is above the 21, I'm thinking it's fine. And it closed Friday 26% above the 21. So it's stayed above it this whole way. So that's my guardrail. That's my line in the sand for this stock. So NVIDIA and SMCI are two of my largest holdings. And I don't know, I'm just gonna stick with it. Yeah, it sucks that it was down, $20 or whatever on Friday, but come on, man, if you bought this thing at properly at 357, you got big gains. I don't know, you could trim some along the way and go buy yourself something nice, but I don't know. I don't want to be complacent, but I also, the people who say, like Jesse Livermore said, the big money's made in the sitting, and that's true. Not in the thinking, it's made in the sitting, and it's hard to sit through these. But I think a lot of the people going to cash are the ones preaching Jesse Livermore. You got to sit through it, and you do. If you want the big gains, you got to sit through some of this stuff. So anyway, AMD is another one of my holdings here. Yeah, it had the reversal day. It was really strong in the morning, man. The thing really was motoring. I don't know if there was news or not. I know Lisa Su, there you go. This is Friday morning. Lisa Su has an interview on Monday after the bell. I think I'm looking forward to listening to her speak. She said that the AI market was 400 billion and people scoffed at her. And then Jensen Huang at NVIDIA said it's a $1 trillion market. And if you just listen to the conference calls or read the transcripts from Dell or Palantir or Broadcom, AMD, SMCI, they're all saying the same thing, like AI. We're just in the early innings. And it's going to turn into, an AI revolution where a lot of money is going to be made. So just sit tight and let it evolve. Don't get too crazy and make rash decisions. Like I say, you sell something like this on Friday, this thing could gap up to 220 on Monday, and you're going to be paying a heck of a lot more for it. So anyway, everybody has their own time frames. I respect that. Everybody's got to do what they have to do with their portfolio. So anyway, I'm going to get into some other stuff. Because some of the defense names, some people asked me to look at a few of these stocks. So the rally was, the Mag 7, but now it's really broadened out, which I believe is healthy. And this is the aerospace and defense stocks. It's logical they would do well, seeing, the current geopolitical environment. And this is Leonardo DRS, and man, what can you say? Making new highs, broke out of a base, showing strength. So, I like stocks making new highs. AV, another person asked me to look at this one. I mean, it gapped higher on earnings, and now it's kind of pulled back a little bit. We're seeing that a little more often here with gaps higher. They're not just soaring higher, but they're pulling back a little bit, squatting a little bit, and some are still taking off though. So it's still, to me, very healthy market. Howmet, HWM, aerospace, this one obviously making new highs, obviously trending higher. Kelly Slater stock, just surfing the moving averages. So the aerospace and defense stocks are doing well, except for Boeing, where literally the wheels have come off on this one. I don't know if you saw that in San Francisco. The wheel came off on departure and crushed some cars below. It's not funny. Boeing, really, the doors and the wheels are coming off on this one. But it's government-sponsored stock pretty much, and people like Boeing, but man, the wheels literally came off on that one. All right, let's go to some of the construction stocks. I mentioned the broadening of this rally, and this is a road. I had this on my ready list the last couple of weeks, and it's just kind of trading sideways, trading tight near its moving averages. And last week just blasted higher. It's a weekly review, so I got to look at the weekly chart. It was up nearly 6% last week, which is a good move for any stock. So congrats to the longs who took on that trade. Power is another one. I call it power, but it's Quanta Services. Broke out of a base, and see, this is an example of one that just broke out and just keeps ripping higher, right? If you bought it here at the breakout 219.17, where it gapped higher, what was the low that day? 221. So yeah, there's a big gap there at 212. But man, this thing's romping higher. Real strong stock. STRL, another one that I like, Sterling Infrastructure. This one gapped higher in earnings, and this one's just, trading higher as well. No, somebody said it was a short stroke. That's not a short stroke pattern. Anyway, doesn't matter. Sterling Infrastructure, very strong. General Electric, I mean, this thing's partying like it's 1999. Even with the pullback in the market, it was up yesterday. Just a super strong stock. And this is what I'm talking about. These strong stocks, you can't buy them here. So if we do get a pullback in the indexes, maybe this will form a flat base pattern or something, and you can get into it. But man, since the breakout here, this thing is just I can't buy it up here. It's just way too extended. It was up nearly 6% last week. Anyway, yeah, that looks good for GE. Eaton is another one of these diversified operations. Our friend Andy in Kansas, he posts these construction data points, and man, construction is booming. Our friend Andy in Kansas, so you got to pay attention to that. And this is the data centers need power, and so Eaton and General Electric, these power companies, diversified operations I think they're going to have long runways, even though they're extended now. That's what I'm saying. You got to look for like a base, flat base or some sort of pattern to get in there. They're going to be very hard to buy. The HVAC stocks, building air conditioning and heating products, these things are showing a lot of strength as well. That's a Comfort System. This is Modine. Pull back to its 21 on Friday. Yeah, it was down, had a rough week, but it's been a really strong stock. And then, of course, the home builder, Lenny, they report earnings on the 13th. What is that? Wednesday. So looking forward to their earnings next week. Toll Brothers has been a real strong one as well. It was up more than 3% last week, $120 all-time high. So Toll Brothers looks great. Anyway, I'm not going to go through all the home builders. I'm going to move on to the software stocks. And the software stocks, they got hit, except for a few of them did well. This is Samsara, gapped higher, 13%, 14%. With a heavy volume. So that's a move not to be ignored, Dan, but I cannot stand the way this thing trades. This is their classic, stair stepper stock where it just, goes up, trades sideways, goes up, trades sideways, goes up, trades sideways. Now it goes up again. What I want to see when I own a stock is something that, blasts higher. And this one's just not doing it. So anyway, Samsara, congrats to the longs. That's a great move. Oh, somebody asked me about this product, HEAR. This is a consumer product. Yeah, this looks like it's gone sideways for a long time. They have earnings Wednesday as well. That's why. Okay. So yeah, if you look at Turtle, that's a stock I used to trade back. Yeah, and then 2020, when everything was going up, it had a nice run, but man, it's been sideways for a long time. And that one belongs in our consumer group, not our software names. Sorry about the digression. Anyway, Snowflake sold off following earnings, sliced to 50. And this is why I sell when they slice to 50. It's sliced to 200, and it just cannot find a bottom here. There's just a relentless selling. Somebody said they'll buy when it hits 150, and maybe they'll get their wish. We'll have to see. But if you look at the weekly on Snowflake, it had this big sell-off like all the software names long period of consolidation. Looked like it was going to break out and run, and nope, it just pulls right back to that old stage one base there. Let me see. Frog is another one. Someone asked me to look at Frog, and this one has emerged from that stage one base. Let's look at the daily. Yeah, this one gapped higher, then pulled back to a moving average. That one looks fine. Down, 1% on Friday, where the index was down more than 1%. So that looks like it's showing some relative strength. Giga Cloud, this one is definitely showing strength. Just pulled back to its 21 on Friday. When the index was down, it was up 1.42%. And then Adobe, they report earnings this week as well. This is a big, important company, and it's trying to find support here at the 200. That looks pretty weak. So they're going to have to deliver some strong earnings on the 14th, which is what, Thursday? Yeah, Thursday. All right, that's enough for that. I do have to go to the retail names because there's a lot of retail names that I like, and I've been waiting for Abercrombie and Fitch, which has had a long run, and now it needs to form a base. They reported really strong earnings. The guidance was conservative, but it's something that they can definitely meet. And these guys are doing more than $1 billion a quarter, a couple quarters in a row. They're going to do 5 billion in sales. It's a 5.9 billion market cap. It's a little over one-time sales. This is not an expensive stock. I'm just waiting for it to form some sort of base or bottom out here. It sliced its 21 on Friday. I'm not going to read too much into that, but we're just going to watch Abercrombie and Fitch. They're still doing well. And look at these margins. They're expanding their margins. Their products are in demand. So good for them. Elf needs a rest. I think it had a big move. I got a little extended here. What was this, Monday? It was up 221, then pulled back to its 10 EMA and bounced a little bit. And then on Friday, it was up to like 213 and closed at 200. So that's not a let's look at the 10-minute chart on this one. Yeah, so there's your there's your move higher. There's your move higher on Monday, made an all-time high, pulled back to its moving average, and on Friday morning it had strength and then sold off with everything else. Looks like the algos just turned on the sell buttons and just was selling all day. Relentless selling. Deckers going into the S&P 500 this month. I believe it's the 15th or the 18th. Something like that. Next weekend. Anyway, it's just grinding higher. I kind of like this, made that high at 903 and kind of making these higher lows along the way. And I think probably a stock split is in order here. Why do I say that? They only have 25 million shares in their float. So, 4-for-1 would at least make it 100 million, make it a little more liquid here. Somebody asked about estimates. What are the estimates? And companies, Market Surge provides these estimates here. And I think they get them from analysts or, just where the company says we're going to guide to a certain level. I think Broadcom said they're going to do 50 billion in sales. And so you'll see 50 billion, tabbled up here in the, the data here, but they're going to say, they're going to give guidance where they can beat. So, these estimates, don't take them as a gospel. These are they're fluid. These are guesstimates that the good companies that the CEOs have a good handle on their business, they know they can beat. So Deckers, it's got double-digit sales growth here and looks pretty good to me, but don't go by the estimates. Because they're not concrete. Anyway, CROX broke out of this stage one base and has been showing some good strength, even with the pullback Friday in the markets. This thing held its ground, and it's pulled back to the 10 EMA last week, and CROX looks good to me. I mentioned this to a few people that, yeah, I like this consolidation and the breakout move. Obviously, the growth is not, where we want it to be. The single digits, but yeah, I'm just going to keep my eye on CROX. It's performing well, and performance is, price pays, right? Price is everything. So CAVA, I got to go to a restaurant stock. This is one that I had on our ready list recently. Some folks at mcstockcharts.com bought this one. It just ramped higher last week, up nearly 9%. So CAVA, performing. Performance is everything. And this one is performing. This is a nice IPO base. Paint by numbers, had the buy point down at 48.69. But anyway, CAVA looks fantastic. Dick's Sporting Goods, strong stock. They report earnings this week. You can just look at the weekly chart here. This long period of consolidation. The longer the base, the higher in space. I expect strong earnings from Dick's, and here you can see the estimates here, just single digits sales growth, but double digits earnings growth. So yeah. Dick's, we'll have to wait to hear from them on the 14th, which is Thursday. Anyway, I've got to get to the drug stocks because there was a lot of news in the drug stocks last week. They have been performing better recently. Novo got approval last week for what I think kidney and cardiovascular within the last couple weeks. Kidney was first, and then FDA approval on Friday for cardiovascular disease, which is the #1 killer globally. That is massive news. They are now way ahead of Eli Lilly in the race for approval for the big deal about that is they get the approval by the FDA for cardiovascular and kidney means that they're going to get Medicare coverage. So way more patients can afford their drugs because their drugs are expensive. But the problem is manufacturing. Lilly and Novo are both selling everything they can manufacture, and that's why Novo bought Catalent for $16 billion. They have 3 manufacturing plants, and one in Italy, one in Belgium, and one in North Carolina. I think in 2026 they'll be online. So Novo's playing the long game. I think they definitely have a leg up now on any competition with the approval in the cardiovascular, and that's going to lead to Medicare coverage and way more patients. But they need to manufacture more. They're selling everything they can make, and you can see it's reflected here. Look at these margins, 85%. This is crazy numbers. 41%. Accelerating sales growth, 37, 39, 41, and the earnings growth is phenomenal. Yeah, I know it's an expensive stock. It's got nearly a 600 billion market cap because the growth is coming down the road, and that's kind of the way the market works. It front runs the growth. Anyway, I mentioned Eli Lilly. They got a letter from the FDA delaying their Alzheimer's drug, which is it's not good news, put it that way. And the stock barely did much because they have a big pipeline and a lot of drugs in their arsenal. So it was down 2% when the Nasdaq was down, 1.6%. I don't know, whatever it was. It doesn't matter. It just pulled back to its 21. Lilly is a monster. They're selling everything they can make of the GLP-1 drugs as well. So, I mean, there is plenty of room in the weight loss drug market. I mean, the demand is massive. And like I say, Novo has the advantage now because of the cardiovascular FDA approval. And FDA has been really tough with that. Lena Khan at the head. They're a pro-consumer, anti-business group right now, but good luck trying to get approval from them. I'll get to that in a minute. Viking is one that, it's sold off. They had a gap higher. They did a secondary offering, which was smart at $85. They raised like 600 million in cash, so they're flush with cash. They say they're going to go it alone and launch their drugs, but I think they really want to just get a buyout. So we'll see. We have surveillance in their parking lots, seeing if those Merck executives are in there negotiating a buyout. Anyway, yeah, I pulled back last week. People are freaking out about it. This thing's going to move with data. They're going to release some data, pretty soon. And if it's good, the stock will probably go higher and, eventually it'll probably be bought out. Anyway, that's enough of that. I did mention the FDA and they denied AMLX ALS drug, the Lou Gehrig's drug, which is named after the former Yankee baseball player. If you know anybody with this disease, it's insidious, terrible disease. But this is the problem with biotech stocks with one drug, down 82% in a day, and I feel bad for the ALS community. Charlie Wiedemeyer was a football coach at Los Gatos who, for years and years and years, was still coached with that disease. Of course, Dwight Clark, the 49er football player, passed away of Lou Gehrig's disease. But anyway, a sad day for the ALS community as their drug didn't cut the mustard. Sorry. AQST is another drug stock that I like. They have a platform for ingesting, instead of jabbing an EpiPen in a person's leg or whatever for seizures, anaphylactic seizures, they have a film that you just put in your tongue. It works rapidly. So yeah, you don't have to, rush for a pen and stick somebody in the leg. You could just carry this with you in your wallet. This is really nice technology. The stock got a little bit ahead of itself. As you can see, it's blasted out of this base here. And then pulled back. It was getting like, I don't know, 30%. On this day, it was like 36% above its where's my markup tool? Yeah, 36% above its 10 EMA. And it was doing this every day. It was like 31%, 30%, pulling back, pulling back. So it's been doing that for a couple of weeks now. And so every time it gets like 30% ahead of its 10 EMA, it pulls back. And Friday it closed at 13% above the 10. So that's still a really hot stock, white hot. Anyway, that's it for me. Thank you for watching, except for in the honor of the great Steve Jobs. One more thing, as he used to always say, I cannot deny or cannot go on without acknowledging the rally in Bitcoin. I don't know how people play Bitcoin. I know people love it because it trades 24/7, 365. This is how I bought it. I don't know. I'm not a Bitcoin guru or Bitcoin guy, but I recognize a rally when I see one. So I wanted to participate, and this is one way I could do it with the iShares. Obviously, MicroStrategy is the leading stock in this computer software database. That's another really hot stock that broke out of a base and just ripping higher with the price of the digital currency markets, which have seen a great rally. And then CLSK. Clean Spark, this is one that, I'm trading, but I say, got to own it. Kind of like Giga Cloud technology. Really trades wildly. But, you got to recognize a rally when it occurs, and there's been a rally in these Bitcoin stocks. I don't know the difference between a miner and, uh, I'm not a real proficient expert at the Bitcoin traders. This is Mara Digital, Marathon Digital, I should say. MARA, Mara is the ticker symbol. And like I say, these things are trading wild. This one obviously not as strong as the MicroStrategy stock or the CLSK, but that's why I bought IBIT. And that's it for me. Thank you for watching. This is just that iShares, recent IPO, the exchange traded fund. So anyway, that's it for me. Thank you for watching at mcstockcharts.com. We never give up.